Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to news about EVE Online, we haven't had that much last week, but we did get that EVE Online video from CCP that basically gave us some of the most important stats from our last year in EVE Online. I thought it was very cool. Not super accurate just yet because apparently I am mostly an industrialist, which I think comes from a number that put me in like the top 10% by accident. It's that I produced like 2 million units or 2 million items, and that's because I made quite a bit of ammunition when I was testing that out. So by accident I think I moved from the PvE category, because I think my exploration stats should be pretty high, to the industry category. Still, it was very cool, super nice concept, and a very nice surprise as well to see that CCP had developed something like that. I hope they keep it up. I hope that they refine it and that they perhaps add even more stats, because that's what us EVE Online players absolutely love. So with little news, I think we can just jump straight to the new Eden store. Take a look there. I think we're too late for the sales. If I'm not mistaken, last week there were a couple of days where we got like 50% off of some skins. That is probably not going to be the case anymore. It's still the Yaul star skin that's front and center. It looks really cool with the extra light effect in front of the ships. Is there an Ishtar? Yes, there is. Alright, perhaps I'll grab myself the Ishtar skin. It could be pretty cool to explore with that, to try and attract the bad guys and then slap them like one of those super deep sea fish there, and then just take him down with my drone. So yeah, it's still the same here as well. Next up we get Isideko skins, and if we keep going down, then we get to the Black Serpentis skin. So it's still the same, no sales at this very moment. But some of these skins, you know, 55 plex and things like that, feel like they are decently, reasonably priced. Alright, that means that we can move straight on to the market. And as always, we are going to start with some plex and stuff. That's going to be at 225. And let's take a look at what plex are doing. We'll start out with the chart, and you can clearly tell that there's still more hesitation in the market. So we have two sales that are clearly visible here due to the increased volumes. They have put some pressure on the price, bringing us to the 3.25 million average range. After the last sale, we did jump back up towards, let's say 3.3, something like that, probably even a little bit more, 3.4 million, but no, pressure is continuing. We are already back down below the 325, so we are yet again in my opinion, pretty cheap territory. In GTA 4.4, the sellers are going for just shy of 3.5 million. I do think that shows that there is some upwards pressure that is starting to build in the market. Buyers, though, still below 3.2 million. They want to keep the plex prices low, of course. Then if we go for the player-owned trade hubs, the sellers do go down to less than 3.3 million. That's where the averages come in, of course, for the chart. And then if we go for the buyers, I think that they'll go up just a little bit, yeah, just a little bit, but still below 3.2 million ISK, closing that margin quite a lot. So right now, still very cheap plex to find in the player-owned trade hubs. It is noticeable that it's mostly in Obanen that they're being very aggressive in the price. Once we get to the perimeter trade tower, we're above 3.3 million for most of them. And then, yeah, remember in GTA itself, they're already trying to sell for almost 3.5 million. Of course, there's a tax difference, there's a margin there, but I am personally reading this as the market not really wanting to test new lows to go close to 3 million or anything like that. So and we're still pretty damn low, but I do think that a bottom will be forming at this point. Next up, we have the multiple pilot training certificate, and I think this one is also showing that upwards pressure. There is no pullback here. We're staying well above 1.5 billion at this point for the multiple pilot training certificate, and I think you can tell also from the 5-day moving average that's trying to pull away from the 20-day that the upwards pressure is there. This unfortunately does mean that the volumes will be declining for the multiple pilot training certificate. So if you want to be sure of the profits, if for instance you bought right here at 1.3 billion, you might want to consider selling already. But if you have the patience, then of course you can you know, take the long route. But if you have like half a dozen train certificates to sell, I would consider doing so sooner rather than later. It really depends on the volumes, because that's what's going to go down. If we look at the sellers, 1.6 billion already, and in JITA these go up to almost 1.7 billion, so there's definitely upwards pressure in the market here. Buyers have been forced above 1.5 billion as well, and in JITA it's gonna be pretty much the same. Yeah, it's pretty much the same. In fact, most buyers really find themselves in the perimeter tranquility trading tower. So here, yeah, I think this is one of those indications that bottoms should be forming in the plex related stuff for those that are at 1 year lows. Next up, we have the skill extractors, of course a chart that mirrors plex very closely, and we can see that we are again dipping below the 380 million mark. So we have 371 million for the sellers, 362 million for the buyers. Again, that very narrow margin, and pretty aggressive selling apparently in the player owned trade hubs. And in JITA, 383 so that is going from 371 to 383. That is a pretty big difference between the sellers in JITA and in the player owned trade hubs, which again to me indicates that the market is really hesitating and potentially we could be going lower, higher, excuse me. I gotta drink a little bit here because my voice is failing. Alright, sorry about that. And let's move on to the injectors then. Here are the large scale injectors that also saw a very nice pullback, getting close to 800 million, but here upwards movement of the 5-day moving average is pretty obvious. So we're talking 851 million almost for the sellers, and still just above 800 million for the buyers. These are pretty patient buyers at this point. They really want to keep the prices low, because what's mostly happening on these upswings is apparently that the sellers start to move their prices up, but the buyers are very hesitant to move up as well. You can see in JITA they're trying to buy them for less than 800 million ISK, and the sellers do go up to 880 million ISK. So that becomes, if we look at the JITA margin, quite a healthier margin, practically 10% here. But if you look at the trade hubs, where people, at least the sellers, are finally starting to be a bit more aggressive, 851 million, but also 808 for the buyers. Much narrower margin, completely different picture. But I think here again, it's pretty obvious that the upwards movement is starting. After that, we have the small scale injectors, completely counter trend. That's really unusual. Usually small and large scale injectors, of course, very closely related to one another. Here we see more pressure back towards the 170 million range. We're talking 170 million for the sellers, 162 million for the buyers. And again, we'll take a quick look at JITA going up to 180 million ISK. Again, pretty sizable difference. Whereas the buyers, I don't expect them to move much. No, in fact, the buyers are down 161 million in JITA 4.4. This is a unusual thing to happen. Usually you're forced to be a bit more aggressive in JITA in order to get these items. So as a result, we see for the first time, I think in a very long time, skill injectors, small skill injectors going down, whereas the large skill injectors are starting their upwards movement. I think the one that will win out in the end will be like a determining factor for the rest. And I think right now my money would be on upwards prices for most of these items. We still have the daily alpha injectors to take a look at. This one is continuing to meander at the less than 40 million range, which is pretty damn low. So we are talking less than 40 million for the sellers, and that's in JITA. I should have put the filter back on. Pretty much the same in the player owned trade hubs, and then 37 million for the buyers. Super narrow margin here. I think an item with a lot of potential upwards movement, but you gotta be a little careful here. This is a unique item, only the alpha clones can use them, and it's like a direct trade with CCP basically, who can determine the price if they want to keep it low so that plenty of alpha clones actually use these injectors. Then this might just be part of their strategy. On the other hand, it's pretty obvious that the volumes are up quite a little bit, and that is because we've had quite a few consecutive sales of these daily alpha injectors. factors, and so this may really be a bottom and a very nice opportunity to jump in on this. So the plex stuff category, let's take a look at the hypercores as well. I don't think that I want to speculate on the hypercores at this point just yet. It's too new an item, going for 340,000 for the sellers, 320,000 for the buyers. Really narrow margin, but most of the other stuff does feel like it's very close to low points, and like once the holiday seasons are really over and the hype machine towards FanFest starts to build up, I do think that demand for this will start to go up, and that will have potentially nice profits to make here. Next up, we have the mineral market coming in at 10:30. Let's start, as always, with the smallest or the biggest volume item normally, which is titanium, and that one is going down from 6.5 to 6 ISK, but with even despite this pullback, which happened after a very sharp rise, of course, when CCP announced that yes, indeed, we are looking at a resource distribution throughout EVE Online, and it's going to be one of the main topics of development in the upcoming weeks and months. We had this massive reaction from the market, bring the price up from 5 to 6.5 ISK. Now we get a little bit of a pullback, but we are still selling for, let's take a look at that, 6.30, 6 ISK 30 for the sellers of titanium, and buyers are at 5.91. So you're easily selling your titanium for above 6 ISK, which is above average for sure if we look at this 1-year chart. Not bad, and this does increase the value of mining throughout HiSec, especially, I think, because in nullsec the sources of titanium have gone down in volume, which means that they need to import more, and we get to take advantage of that. For pyrite, it's staying above 5 ISK. Very nice little performance in the last couple of days, in fact, to maintain this price range, probably due to the same thing, but it's 520 for the sellers and 5 ISK for the buyers. If you look at where we come from in the first part of the year, this is definitely a pretty damn nice one of the minerals where, well, in the first part of the year, we should have bought this for like 3.5 ISK, and we would be looking at a decent profit for pyrite, which is actually something that you know, has been a very long time since you could say that over a medium to longer term trade in minerals, you should have actually bought and then held them and try to sell them now, because most of the pressures on the mineral market has been to go down because of, well, the Rorqual situation and the fact that CCP really changed everything up so that regions would become super independent, able to provide their own resources. I think that's part of the reason why nullsec is stagnating at the moment, and I do think that CCP has that in the crosshairs. Next up, we've got Mexelon. This one was, I would say, the one exception to that pressure. Mexelon was actually able to maintain a price of 55, 60 ISK, despite all the others losing like 50%, 75% of their value. This one was able to stay at its historic price range, mostly because it was a nullsec bottleneck, or the last nullsec bottleneck, where they would need more Mexelon than they could produce locally, so they had to continue to import that. People producing this from HiSec would have a very good price. What happened here, of course, July, August, we had the nullsec blackout. My theory, I think, still stands. This basically forced miners in nullsec to find a safer option than to go into belts and anomalies, which I think they landed at moon mining, and that is what finally allowed them to, after the investment of more moon refineries, to actually also tweak their own mix of minerals that they produce. And that is when we saw that Mexelon was no longer a real bottleneck in nullsec, so we had a crashing down to 40 ISK, losing 1/3 of its value over the course of a couple of months. And that's, I think, the story there. And now we can see that with these resources and the distribution of it back in the crosshairs, some more imports are needed, and we are working our way back towards 55 ISK. So that's basically the story here of this Mexelon chart. We're talking 55 ISK for most sellers and 50 ISK for the buyers, which is, well, a little bit below average and the normal price, but definitely a nice comeback from the 40 ISK. During these months of October, November, I basically definitely said I'm not selling any Mexlon. I'm waiting for better times. Then we have Isogen, a bit of a surprise bump here, but only to 15 ISKs. Isogen is basically the exact reverse of Mexlon, where Mexlon was able to maintain most of its price points despite all the changes in the last couple of years. Isogen used to be worth like twice what Mexlon was, so this lost like 90% of its value because it is now being massively overproduced everywhere compared to how much of it is needed in general industry, in EVE Online, and that meant that we went to a low point of 12.5 ISK not that long ago. A bit of a resurgence here in the month of December, but it's really only to what historically is still a very low price of around 15 ISK. Sellers are at 1561, buyers are at, well, the first one at 15, most are at 1450, so this is still that really big margin. It's just a reality for Isogen that there is way too much being produced, and as a result the price will probably stay low unless CCP does something drastic about this one. Then we've got the Noxium market. Rather similar story, I think, to Mexlon in the first part, where you see that in July, August with the Noxic blackout we have a clear decline of price. Noxium was actually a very early victim of all of the changes that CCP had done to mining. I think it used to be worth, if it's not 1100 ISK, it's like in the 600-700 ranges, so it lost a lot of value, but for the last 1.5 years, I want to say, it managed to very well defend that price range of 300 ISK. And here with the Gnostic blackout, that was not to last, and unfortunately now this market has adopted that new price range, 200 to 250. That's where we're probably going to stay. 250 ISK for the sellers and 223 for the buyers. That's the Noxium market. So where Mexlon managed to come back, Noxium is still in a much lower range. After that we have Zydrine for the former Nulsic minerals. Also very same story, longer term. This stuff used to be worth I think this is the 1100-1200 ISK range for Zydrine. Now it's worth around 500 ISK because of course it can now be mined in HiSec as well. 500 ISK for the sellers and 465 for the first buyer. Finally finding a little bit of stability and a range that the market is willing to work with. This after, I would say, a year, more than a year of straight declines in the value, and the pattern here that you should note is 1.3 million units, 800,000, 2 million units, 3 million units. These are basically packages of Zydrine that have been mined from a single moon. A corporation does that, brings them here to sell them, which means that we have a lot of sellers, very strong competition here, and decently narrow margins. Back in the olden days when resources were not as evenly distributed as now, Zydrine and Megasite were pretty unique to 00 and wormhole space, and as a result you had a much bigger margin between sellers and buyers. You had much bigger quantities, much fewer sell orders, and basically sellers that could dictate the price of this item. And that is completely changed, of course, with massive pressure on the price as a result. Also much more stability in the longer term, I think. After Zydrine we have Megasite, which used to be the most expensive Tech 1 related mineral, and now, well, it's definitely not anymore. It's managing to make its way back to 400 ISK, where I think we are planning to stop. 403 ISK for the sellers, 380 to 370 ISK for the buyers. Still a pretty heavy margin, and you can again see in last 24 hours half a page, 1 million, 2 million, 4 million. That's basically these this constant supply does exist because there are now massive sources even in HiSec for these minerals, and with massive I mean in number. It's always difficult to get really big volumes of Megasite, but there's now many sources across HiSec as well that is keeping this supply very stable. I'm suspecting that Megasite will try to defend 400 ISK. Will it succeed? Might not. So we'll see how it works out. And then finally we have our one unique mineral, which is called Morphite, tied to the Tech 2 economy, and that one is doing very well, close to a 1-year high point above 11,000 ISK. And you can see that half a year ago we could have bought this for 7,500 ISK. The usual cutoff point for me is 10k. If we go below that, you start to look for opportunities to buy, and then when you're above that, that's when you want to sell, of course. So Morphite is selling for 12,400 ISK almost. 12,300 is more accurate, and then 11,000 for the buyer. buyers, it is definitely in demand and in a pretty strong period right now. Next up, we have our PI market coming in at 1940. Let's take a look at that. PI general trend at the moment has been much too low demand for the production, and the first signs of recovery were there, but none of them really managed to really get back to their averages. Let's see if it's different this week. Interesting first data point here. Broadcast nodes, today's daily average seems to be at 2.25 million, which is quite high, and it's not to last here. Well, although it's only one seller of 15 units that is selling for 2 million, most are at 2.3 million. On the other hand, the buyers are below 2 million still, so the average prices Jeez, it's starting again in my throat. The average prices are staying close to the 2 million actually. So let's grab some drinking again. After the holidays, yeah, you need to get back into the swing of things, and it's just water for anyone that's wondering. So let's move on to the construction blocks. This is the pattern that I was actually talking about. You can clearly see that 11,000 disc is the average for this item, and then here in October we have a fall slump, which was mainly, in my opinion, due to a lack of demand. Clearly see a low point here to almost 8,000 disc, and then with this slow recovery we're not at the averages just yet, but now for the first time in the last couple of days we are starting to see the 11,000 daily average show come back. So we're talking 11,600 for the sellers, 10,100 for the buyers. So sellers are back to a normal price. It's just that there's still a bit of a lack of demand and the margin is higher than normal. If buyers eventually get forced up to like 10,500 disc, then I do think that we're back on the normal chart. So the recovery is slowly happening. Let's hope that it continues through the winter, because I actually have some PI investments that I would love to make some ISK on. Next up, we have the consumer electronics. This one tells a different story. It tried at this point 1, 2, 3 times to get back towards that 12,500 disc average range, but every single time new supply, we can see that from the volumes, tends to crash the price back down. Although you also have volume spikes once it hits 10,000 disc for investors that want to take advantage of these prices. So right now consumer electronics are selling for 11,500 disc, at say 1,000 below its normal price, and buyers are, you know, 10,400 disc. Not yet at the point where investors are going to start to jump in, but clearly there is a healthy margin between these two, which means that we are trading below average. And that recovery, well, we tried a couple of times, we just haven't been able to continue that. After that, we've got the coolants market that is staying at around 13,000 disc on average, which is above average. This is one of the exceptions to the rule. Tied to fuels, it does tend to make a difference if it is like a consumer PI materials or the PI materials tied to fuels. I personally do think that there is a general difference between the two, and that they don't necessarily do the same thing. So here we get coolants, 12,000 for one seller, but 13,200 for most. That is a very respectable price, and the buyers at 12,000 disc, I would say, are slightly above average as well. So here we have a pretty healthy coolant market. The cryoprotectant solutions, you can see this spike here, a unique item in the sense that it is needed for the construction of the new triglavian related implants, and that means that we'll have a little bit of volatility depending on supply and demand in that market as well. Right now, or I should say in the last couple of weeks, after reaching a high point of 180,000 disc, we were starting to decline back to a normal range. I think buyers were getting very close to 100,000 disc again, but here at the tail end we do see a slight move back up. 144,000 disc, definitely above average, and the buyers forced up to 119,000 disc, and you can see that in the last 24 hours. So there's definitely some fresh competition coming in that has jumped up from right here to 100,000, and then you can see, yeah, some 114, 115, but nope, then competition really starts at 119, which is going to definitely help this price range stay above average for the year. Then enriched uranium, not much to say, right? 13,000 to 15,000 is the normal range, and we're getting back to that 14,000 range. 14,500 for the sellers, 13,200 for the buyers, 300 almost. That's like really close to the normal average price already. Integrity response drones next, another data point putting it at 2.5 million. That is interesting, and this is very interesting. Let's see if there's sellers in the player owned trade hubs that are going to try to undercut this. Yeah, but not by much. It's just 126 units at around 2.5 million, and then these sellers are up to 3.4 million. Buyers are at 2.3 million almost as well. Clearly something has happened in the integrity response drones market. It is possible that volumes became so low of availability that a relisting, look at it, in the last 24 hours was possible. Someone bought everything and is now trying to eke out a profit at 3.4 million. It's going to be very interesting to take a look at this one next week and see if they manage to get sales. So if we have like an upswing to about around 3 million and that it manages to stay there for at least a couple of days, or does the market see this immediately, and do we have some investors that have bought at the low points that are ready to fill this gap and try to grab the profits, which would be very bad, of course, for whoever just bought everything and relisted it a million higher. Interesting attempt, and this is of course the market in EVE Online. Next up we have the mechanical parts. Same story here. You can see the decline starting in the summer, then we get the fall slump here in September, going to less than 10,000 disc on quite a few occasions. A slow build back up. Average price, I would want to see us above 11,000 disc. We're just at 11,000 disc for the sellers, 10,400 for the buyers. So slowly we're trying to recover, but it is not there yet. Organic mortar applicators. Is that a bird outside? The hell is that? Weird noise. Organic mortar applicators staying above 1 million ISK, but here 1.05 million for the sellers, less than a million for the buyers. That is still below average. No manipulation here. After that we've got the robotics staying flat at 90,000 disc. This one is not showing any signs of recovery either. 95,000 for the sellers, 89,000 for the buyers. Basically oversupplied as well. You can also see that fresh supply is starting to dwindle because we are in such a low price range. Eventually this will recover, but apparently we still have plenty of stocks for the current demand to keep the price low for a while. After that we've got the self-harmonizing power cores, another one with a weird data point at 2.8 million. This is weird. It's in almost all the advanced PI materials. Is this really manipulation because the market became so small, or is someone really speculating on an announcement from CCP that there's structure stuff coming, or does someone know something? Leaks, well, who knows? Tinfoil hat moment right there, but 2.8 million for the sellers, 2 million for the buyers. Clearly a much bigger margin than before. And here I would say that whoever tried is probably the one that tried to go for the close to 3 million mark, and that is already being undercut here by quite a few units. So it's going to be again interesting to see how long and how well formed this spike will be, or will it just get crushed by supply in the upcoming 24 hours, for instance, and then it could end up being just a blip on the radar. Superconductors next, staying at 10,000 disc, trying to make their way back, but you can see 12,500 would be a normal price. Again, the decline through the summer, the fall slump to 10,000 disc and below, another December slump to 8,750, and now we're just slowly trying to make our way back. This is very bad news for me personally because I produce superconductors, so I am basically building up a massive backlog of units. Once the price does recover, I'm gonna have to be careful not to oversell and recrash the market. But this one is currently selling for 11,500 disc, should be 12,500, so we're obviously below average. 10,500, that's the normal 1,000 disc margin between the two, but it is below average by quite a bit. Slow recovery, yeah, you might say that the daily averages are sometimes jumping to high points here and trying to get back to those averages, but we're not there yet. And then we've got test cultures, the very strong performer here after a terrible year plus, I think, where it was below 10,000 disc, went to a low point of 6,250. Nice recovery with a spike up to 13,000 disc here, back down a little bit, but still 12,000 for the sellers, 9,400 for the buyers, showing that test culture is back on actually an historically normal price, I would say, maybe even a bit above average, but showing the lack of demand as well because of the huge margin that opens up right away. This is a lot more than normal between sellers and buyers. And then finally we have wear mainframes and another advanced PI material that is actually going above average. We had this trend last week already, but to my surprise it is continuing. We're now talking 2.5 million for the sellers, 2.3 million for the buyers. Is this a lack of supply? Potentially it is, because people are just tired of waiting for another structure announcement, and so the market is going down in just general interest of being produced. It is possible, but definitely it feels to me like there is some, let's see where it was here, like there is some, yeah, I think it was integrity response drones with that big realist here, some manipulation attempts happening as well. So yeah, definitely something to look forward to next week. Let's move on to the advanced moon materials, coming in at 30.35. As always, the carbonite items first. Crystalline carbonite. Alright, some more of that seesawing movement, which is now, as we look at this chart, been happening for the last 6 months or so. Heading for a low point, recovering to an average price. That's what's happening right now. 157, 154 for one seller, but most at 157, and then 150 or 49 for the buyers. Trading below average, but has a little bit of volatility, constantly bouncing back towards that 160 range. It's going to be interesting to see if that volatility keeps declining. As you can see here, the peaks do seem to be going lower and lower and lower, but yeah, last 6 months or so, pretty volatile and constantly making its way back to the average price range. Ferrite carbide, a little bit less volatile here, but also a slump to a low point at 125, a bit of a recovery, and right now we are selling for 153, quite respectable. 146 for the buyers, pretty narrow margin. It's actually a pretty good performance. After that we have our titanium carbide that you know, just had its slump in November, December, is slowly trying to recover from that. Are we gonna see 200 disc for the sellers? Nope, not yet. 183 for the first one, going up to 189 pretty quickly though, and then 177 for the buyers. So trying to recover here. Tungsten carbide is then the exact opposite story, still at a low point of less than 175. We're talking 172 for the sellers, 171 for the buyers, so a bottom is probably forming considering the super narrow margin here. But yeah, starting with lots of volatility, then just a general recovery after a slump, trying to recover after a slump, and is still in the dumpster. So that's the story here. All of these are tied to different I think places in nullsec that are then tied to like a race that has like influence. I think that's the story there. So let's move on to the metamaterials, which I think is like a step up from the carbonites, and that should reflect the same thing, but it doesn't always. Like here, photonic metamaterials, you can see it doesn't have the same volatility that the crystalline carbonite has. In fact, it is below average right now, selling for 16,200 disc, buyers at 15,500. So there's definitely not as strong a correlation between these two as one might think. Plasmonic metamaterials, that one is doing pretty much the same here, with a slump and then a recovery. Right now working its way back to 22,500. Yeah, almost that for the sellers, 21,500 for the buyers, back to us maybe even slightly above average price. Then we have the non-linear metamaterials, yeah, staying definitely below average right here. There's not that much to say on this chart. That gives me 1 more hour, that should be fine. Then we get terahertz metamaterials, which is in the dumpster. This one does follow the trend of its tungsten carbide counterpart, not doing too well. So this one pretty interesting. Where are the buyers at? 18,400. Okay, that's actually looking like they're already trying to make their, actually they're right here at the bottom. You know, if you're looking for that medium term investment, I think Terra's metamaterials does make sense because we are at a 1-year low point. Then we still have some other advanced move materials that we have to take a look at. Fermionic condensates made its way back to 90,000 disc, back to a maybe slightly below average price, but it's good to see that it's trying to defend that. Supply keeps coming in though, so sellers are driving the price down. Buyers at 81,000, decent margin, nothing too special there. Ferrogel was slumped to 1-year low point and is recovering to 40k, but you know, it needs to get closer to 50 before you'd call it an average price again, so still trading below average. Ferrogel also below average with a rather non-volatile chart right here. Hypersynaptic fibers, okay, this one is maybe a bit more interesting in that you could say 12,000 to 12,500 would be an average price for the first 8-9 months or so. Then we get this slump down to 10,500 disc, and now right at the tail end, where are the sellers at? 14,000 disc. That is not bad. 12,700 for the buyers. Basically, if you bought in the last 2 months, seeing that we sometimes reach 1-year low points, you have a nice sell opportunity with some potential profits. Nano transistors next. That volatility is back, 6,000, back down to 5,000, back up to 6,000, back down to 5,000. Quite surprising to see that you know, this an item that feels like it should be pretty common and in big volumes has this type of volatility, which to me is more in line with what you would expect in Tech 2 chips. The reason is, in my opinion, that we had this super strong summer on a complete lack of supply. I mean, we had like maybe 10 sell orders or something like that. They could ask 6,000 discs and they would get it for nano transistors. New supply is coming in, so there's competition that comes and goes, and as a result here we have this volatile chart at the tail end of nano transistors. Right now we're back to a normal 5,000 disc range, which is still okay to sell, but of course you can see that the potential exists for higher prices as well. After that we get phenolic composites, also in November downturn, right now recovered back to 2100 disc. Really not bad. 2,200 in fact almost for the sellers, 2156 for the buyers. That's a pretty narrow margin at an above average price. Pretty good performance there. And then finally these ceramic fibers, same November slump down to 350. Could have definitely bought there. This recovery is not that strong just yet. Sellers at 434 have a little bit to go until they're back on average. But what some of these do show is that when you reach the 1-year low point, like you could have bought these for 300, now you can sell them for 434. That is a pretty good deal, and that does mean that, in my opinion, it was not tungsten carbide, or it was the Terra's metamaterials, looks pretty damn interesting from that perspective, and a lot of these others have actually recovered back to an average price that is tradable. So interesting. Definitely need to time this market well, but there's risk to be made in it as well. After that we have the Tech 2 chip market coming in at 37.30, let's say. As always, we start with the Aries, an interceptor that to me indicates like a general trend in the Tech 2 chip market, and right now you can see that we broke through the 25 million mark. We are hesitating to go much lower, much more quickly, but downward pressure is still available, is still clearly visible. 25.8 million for the sellers, but 22.6 for the buyers. This is indicating oversupply, despite the fact that the numbers don't seem that unreasonable, and a bit of a lack of demand yet again. After that we've got the Basilisk chart. That was a nice trade to be made right here. Low point of 180, high point at 250. We are now recovering from that. Let's see where the sellers and buyers are at. 220 for the sellers, 190 for the buyers, when we're basically between our top and our bottom. So this is one where we have to wait and see, but know that the general trend, in my opinion, is again lots of pressure on the ships, so you can potentially hope for another decline towards that 180, and you know exactly in my opinion where there's like good deals to be made, considering what we've been seeing in the last year or so. Here is the Cerberus, for instance, went up to 280 million, low points around 200 million. If I look at my, I think, did I Is it still here? They still not move, these guys. Cerberus, I tried to buy one for 195. I have one for 195, and now it's already selling for 229 million ISK. I could already take a little bit of profit. 205 for the buyers. They have been forced up as well. So the upswing is here. It's rather limited in scope, so I'm gonna wait for a better opportunity. But this is the Tech 2 volatility that I absolutely love. A lot of this has changed like a couple of years ago with the introduction of the refineries on the moons, rather than a passive boss that would create the base materials for this and that would also mine passively. You now have a different process. This has caused quite a bit of turmoil and a big markup for most of these Tech 2 ships, but I do really feel like in this last year things have stabilized. We are starting to find the right ranges, and for the Cerberus it is full of potential. Low points at 200 million ISK, high point at 280 million, and you can see that we've been close to that quite often in a very seesawy chart here that is full of potential. And so I've got one Cerberus at 195 below the entire chart. Now it's all about timing the sell correctly, trying to sell as close to 280, I think, which is upwards potential as possible. Moving on to the Crow, another interceptor. Here you get that same thing, that low pressure. Now we're breaking 27.5 million on the downside, not yet at a 1-year low point, but clearly there is a lot of pressure. 29 million for the sellers, 24.6 million for the buyers, and here you can clearly see the lack of demand because there's not that many buyers in this market right now, which is potentially an opportunity. Of course, even for this Crow, that means that you could try to grab one for close to 25 million ISK. Look at the entire chart, upswing potential 35 million, not as often as what we see here in the Cerberus, but it's definitely there. So you could even try to grab a couple of Crows, I think. After that we've got the Eagle. That one is now slowly recovering, a little bit different. I think the Eagle, just like the Munin, always felt a little bit different because it is a nullsec meta, so it is going to see more production, I think, and it's going to be a little bit more tricky to actually make good trades in this one. The Eagle is selling for 234 million, buyers are at 200 million, pretty decent margin, again showing, in my opinion, that lack of demand. Then we get the Guardian, another one that I think bought. Let's take a look. I'm actually going to keep this open here. No, that means that I have one here. Yeah, I bought one for 180 million. You can see again 1, 2, 3, 4, 5 clear spikes. Bottom, when we break 200 million, that happens from time to time, and that's your opportunity to jump in. And that potential 250, 200 to 250, 25% profit, not that bad. Right now we are talking Guardians selling for less than 200 million and buyers are below 180. Know that I have my position ready. I have a Guardian at 180, and again, if you could then sell for like 250 million ISK, that's a pretty damn good trade to make. Right now we are in this place where, despite the fact that you're seeing a decent amount of buy orders, it's 1, 1, 3, 1. This is clearly people hoping to snag one of these really cheap Guardians and then turn it around for a profit. Don't go too crazy with the volumes, but there's definitely deals to be made on this lack of demand. If there was real demand, you would see bigger numbers and you would see much more competition driving the price back up. So the Guardian is definitely close to 1-year low point, in a pretty good place to try your investment. After that we've got the Heretic. I tried to grab that one, but I failed. I was really aggressive with the price here, trying to get the best deal possible, because interceptors have generally really been suffering from a complete lack of interest. The buyers have always been very low. We're talking 64 million for the sellers, 51 million for the buyers. Look at that lack of interest here. Super big margin. This is actually a tradable margin. It's actually very difficult to grab one of these, and this is my buy order here at 51 million. Hasn't materialized yet. Honestly, it's like maybe 3 dozen ships sold here, and then it's my turn. I'm gonna keep it here for now unless we see buyers move up to the 55 million range. I'm willing to be patient for another 77 days. Let's hope that it triggers. Then we've got the Hound, stealth bombers, probably my favorite category to do trades in. Here again, you can see the potential. Excuse me, 40 million, 40 million, 35 million easy, several times over the course of the year. And you know, here we had a prolonged opportunity to buy well below 25 million, and I sold here 22 million, purchased 29.9 million buy. Very nice trade. We're back down, landing on the 25 million, so I think it's too early to buy already, but nope, look at the lack of buyers here again. 22 million for the buyers, supply here 25.5 million, and there's still ships coming in the last 24 hours, a full front page. This is just too much again. You could try your hand at another hound trade here, jumping in on these low buy prices right now. Probably can't get 22 million at this point, but try 23 million. I think you'll get a couple of hounds at that price pretty easily, and then await your opportunity. Stealth bombers also something that is used by third parties quite a lot, that get lost quite a lot, and as a result I think one of the most reliable trades that I tend to make in the Tech 2 ship market. The Ishtar, very strong PvE ship. This is different in my opinion, has a lot more stable market for it. Does have some very nice volatility here over the course of the summer, but this was due to the nerfing of the Vexor Navy issue, if I'm not mistaken, which used to be a drone ship that could definitely compete with the Ishtar. Alpha clone friendly, super easy to get into. That one was changed to become a more of a brawling ship to nerf its PvE capabilities, and that caused quite a bit of volatility in the Ishtar market. Obviously less than 200 million down, 280 at the upswing, but generally speaking this is a much more stable ship like what we're seeing in the last couple of months. 238 for the sellers, 220 for the buyers. You can see a much more normal margin between these two. Decent supply, but also decent demand with some higher numbers and things like that. So a little bit oversupplied with the 337 at the end. Do expect some pressure on the price to start to form, but generally speaking the Ishtar is a bit too stable and also a gauge for the Tech 2 economy, but it has that unique in my opinion place where it is an incredible PvE and PvP platform, so it just has that strong and much more stable demand in general. Manticore, another stealth bomber right here, working its way back to 30 million already, right? 29.6 million for the sellers, 24.6 million for the buyers. This is the in-between spot where you need to wait and see what the market is going to do, in my opinion. Then we've got the Munin that is also trying to recover from a 1-year low point. If you could have bought this for less than 200 million, not bad. Buyers are still at 195. Again, that lack of demand pattern showing up here. So it's a lack of fresh supply that is driving the average prices back up, but you can still try to grab a Munin for 199. This is the same problem with the Heretic and with the Saber, with these interdictors, is that the buyers are just not budging because there's no demand. Sometimes supply dries up and then you get higher average prices, but of course I'm looking for the best deal possible, which means that you know, I want to buy them below 190, below 200 million, and it's actually very difficult to make this happen. You can see from the average prices that it's the sellers that are dominating the price setting at the moment, but sometimes you get lucky, and that's honestly what I'm waiting for. So that's like, no, I'm not going to be more aggressive in my purchasing of the Munin. I'm not seeing the spikes enough, which for instance you can see in the Nemesis, right? 35 million, spike up to 30, coming down from 20 million. This is pretty damn nice, and in fact you can see here that volatility just in the month of December going till now. You could have sold these for 30 million, which I did in fact, bought them for 22 right here, bought them for less than 20 million, and right now you can already sell them back at 27 million. Buyers are still at 20.7 million, but this is the volatility in the Tech 2 ship market that we're looking for. One thing that I am starting to notice here, at the Hound, look at the lowering averages across the board, Nemesis as well, Manticore as well, clearly used to be above 30 million all the time pretty much, and now staying below that for quite a bit more time. This could be an indication that that in the end, now with all the supply lines up and running, general production up and running, that we're back to this normal price range of 20 million at the bottom and then 30 million as the high point. That is entirely possible, which does also mean that you gotta be a little careful with the interceptors, for instance, right? 27.5 million may not be the regular average price, 25 million may be close to that, which of course would mean that if buyers are close to 25 million or below that, it's not the actual opportunity just yet. So look out for these Tech 2 frigates. I'm starting to get the feeling that we are going to be trading with them at a lower range than, let's say, 6 months ago. So the Nemesis right now you could sell for a bit of profit or be more patient. The buyers are at 20.7 million. That is still very, very low, of course. After that, we get the Olneros. Look at that spike up to 230 million ISK. We're back down to 190 on average, and the buyers are at 170. That is clearly below the chart as well. Do I have one trying to buy? Nope. Do I have one here? Nope. The reason I think I don't have an Olneros, I don't generally want to try because of this stuff here. Super low volumes for a logistics cruiser. Compare that right to average, let's see here, let's say 10 or so, and then you've got the Guardian, where you can clearly see that on average we get 40 to 50 trades, and that's why I would definitely prefer risking something on a Guardian than on an Olneros. It's gonna be just like it's very difficult to buy right now in a lot of these ship markets at an aggressive price. It's gonna be very difficult to sell an Olneros at an aggressive price as well. After that, we get the Purifier. You can clearly see here most of the first half of the year we had triggers once we got below 30 million and it spikes up to 40, but now we had this bottom that had formed here at like 22.5 million, and we struggled to stay above 30 million. So again, look out for that lower trade range. I do think it is forming, at least in the Tech 2 frigate market at this point. 28.4 million for the sellers, 24 million for the buyers. And then we've got the Saber, which is, you know, also one that has been struggling a lot. Basically, you could have bought these for this entire year for close to 60 million ISK. Right now we're selling for 70, but the buyers are at 62 million ISK. Pretty wide margin between the two. A little bit of volatility at the tail end. And also 250 trades here. That is not that bad. But I've constantly been hunting for being able to buy a Saber for, let's say, less than 60 million. Never really materialized. But you've had a whole year basically where if you wanted a Saber investment that you could even sell now for 70 million ISK, you should have made it by now. After that, we get a Scimitar, definitely a bit better in the volumes and currently going pretty low as well. So less than 200 million, 192 for the sellers, 173 for the buyers. That does feel very low, but again, be a little careful. 200 plus trade volumes up until, let's say, the summer. Then we get here the null-stick blackout, but now again across the board we do see us go to a lower range. So don't be too aggressive with your buying at this point, is I think my message. The one that is belying me is right here, the Stiletto, 30 million, and it has been able to stay there for quite a bit. 29 million for the sellers though, 26.5 for the buyers. So now we're just below 30 million, but it's very close to its normal average here. So the Tech 2 ship market, I think it's full of potential because there's clearly a bit of a lack of demand at the moment, but you have to be careful when it comes to trying to sell at this point, because I'm not sure if we'll continue to have, let's say here, those same spikes up to 40 million, for instance, in the Hound. It is entirely possible that we will start to trade between 25 and 35 million, and that we could even go to a lower point as well. You can clearly see here bottoms closer to 20. That means that even 30 plus would become potentially a sell opportunity already. So we may have to rearrange our tops and our bottoms in the Tech 2 ship market if this trend continues. After that, the Tech 3 ship market coming in at 52.30. Looks like it's gonna be a long one, this Eve talk, but let's get started. Here is the Confessor. Confessor went down to less than 32.5 million, is now trying to recover. Today's average is at 37.5, and in my trying to buy, you can see that I tried to buy Confessors for 27.5 million. I got 2 out of the 3 that I wanted to buy. So I have Confessors that I bought for 27.5. They're already selling at 38.5 million. There you go, we could make some nice profit already. Buyers have been forced up to 33 million as well. What's most important in my opinion is this 25, 25, 25, but other than that, in the last 24 hours, not that much, nothing crazy. the oversupply here is clearly not showing up anymore. That shouldn't be a surprise considering where we went with the price, but it's an important bit of information. After that, we have the Hecate. You can see here a little bit of volatility working its way back to 45 million, despite the fact that I feel like we were in an oversupplied market at the time. We're basically landing on the average price here, 42 million for the sellers, 39 million for the buyers. There is definitely more supply here. 190 down here is a bit of a problem, but other than that, it's maybe 100 other ones, and these are not just in the last 24 hours. This doesn't feel as bad as it did, let's say, a month ago with the oversupply when we were slumping down here to less than 37.5 million. After that, we get the Jackdaw. That one is pretty stable, just below 40 million. So this one I think is going to be very important for the volumes. 38 million for the sellers, 36 million for the buyers. Super narrow margin, basically a price range that the market says, okay, this is normal for a Jackdaw. And look at supply, 38, 39, 24. It's a bit more than what we would like to see, but this doesn't feel like we're oversupplied. You're not seeing a 190, you're not seeing a 200 plus, 100 plus. In the quantities here, this does really look like that oversupply specter, which dropped the price down to 35 million as well here in November, may be coming to an end. And then finally we've got this Vapel that all of a sudden recovers and spikes up as well on massive volume spikes. So I do think here there's either purchasing from Nullsec in order to try and get some Vapel fleet. I think that's the most likely here, or some massive speculation happening. We're talking 42.5 million for the sellers, 33 million for the buyers. So you know this will not last, but 33 million for the buyers is still quite reasonable. And the good news on this for everything else, of course, is that this Vapel gap now will need to be plugged. That's going to be tech tree production that's going to go towards here. That is going to normally stall fresh supplies in the Confessor, the Jackdaw, and the Hecate. And so that should mean that we have the very real opportunity here to stabilize, to get out of that oversupply slump. You can see it here for the Hecate as well. And to get back to that more normal, healthy market, which also means that I have a very good chance that I'll be able to sell these Confessors for an even higher price, in my opinion. If in the upcoming week, we'll have to see how much supply comes in this Vapel, what's the response in the other markets. But this is very good news for anyone that bought on this slump right here. Right now, it looks like oversupply is coming to an end in the Tactical Destroyer market. Bit of a surprise it didn't last that long, but very good news in my opinion, because I loved it to see this healthy market show how they generally work when there's enough demand and pretty much enough of supply. You could see how when a Confessor was very strong in price, supply would increase there, which would mean that the other ones would get some more breathing room. It was really awesome to see until a couple of months ago. Let's move on to the cruisers. Here is the Legion, landed on 140 and it's jumping up just a little bit. Let's take a look at that. 155 for the sellers, 123 for the buyers. If you look for 123 for the buyers, that is pretty damn low, somewhere down here. I would say that we've been here once and twice before where the buyers were completely gone. Every time it did jump up to new highs. So if you want to take the gamble on this one, I absolutely understand it. My one fear, if you look at the volumes here, well, it's actually reasonable. Last time there were way less Legions available on the market, so my biggest fear was complete manipulation of the market. But right now, 123 for the buyers. If you can buy for, let's say, below 125, I do think that is something worth looking into. The Loki is staying close to its average price, above 180, 188 for the sellers, 165 for the buyers. Let's look for that. No, that's not yet at the high points. It's really only the Legion here so far. Then we get the Proteus also recovering back to 160, 154 now for the sellers on a couple of new ones, but went to 166, 138 for the buyers. That is not a low point either. And then we get the Tengu that is managing to stay stable. That's interesting to have this Legion downtrend, whereas all the others are actually decently stable. 155 for the sellers, 140 for the buyers. That's close to a low point. Honestly, At this point, we've seen the pattern several times before. I think the Legion is pretty interesting to try and grab for close to 125 or something like that. That could yield you quite a little bit of profit. Always have to be a little bit careful in the cruiser market though. Demand does tend to slump down to nothingness, including supply. So this is the big surprise in this chart, right? This looks like, oh man, look at that, 140 and below that. We must have been massively oversupplied. Well, if you follow Eve Talk, you know that that was not the case. We had these 1-year low points at next to no supply. This was a completely dead market, and then these jumps here were clearly manipulation, where someone bought everything out that was available and just started relisting them at 190 and 200 million ISK. Then the competition came back in, supply finally saw the opportunity, but it drove the price back to that 1-year low point, and it didn't even need that many ships. It's come alive a little bit in the last half of the year, but here on this slump, I think there was like less than a full page of supply actually, despite the fact that we were at a 1-year low point. This is a bit of a crazy market, so be a little careful, but the pattern here in the Legion is pretty obvious. 125 for the buyers is pretty crazy low. Definitely something you could look into. And then we get to move on to the extra product. So we're gonna go over an hour for this one, and I decided to take a look at some rigs. Let's just see what the rig market is doing, coming in at 59.30. There we go. So that is in the ship and module modifications. Here we get some rigs. I'm just gonna try to find some rigs that I think will be popular, like armor rigs. And you, for instance, have the Trimark, where is it? Armor pump, just more raw HP. That does tend to be a very popular one, and very, very nice. Look at that, 17.5 million ISK for a thick one, 17.7 in fact for a thick one. Large Trimark armor pump. That is a nice increase in price over 1 year. Pretty expensive. Very interesting for salvagers, of course. Let's take a look at the Tech 2 counterpart. Here is the large armor Tech 2. That's the exact opposite, pretty close to a low point at 130 million. It of course does cost quite a little bit more. Let's then just quickly go over these. That I would say is also at the high end of the average right now. Anti-explosive coming from a high point. Anti-kinetic, a little bit of a bump here as well. Anti-thermal, yeah, 15 million instead of, well, look at where we started the year. That is not bad. Also a high point, look at that, not bad. So the armor rigs obviously at a 1-year high point, 20 million for a large nanobot accelerator 1. That's kind of interesting. Let's see if, just take a quick gander at the mediums. Not as good a chart, but clearly also trading up by quite a little bit. And I will take a look at the small Trimark armor pump. Also clearly trading well above average compared to the start of the year. So quick look at the Tech 2 then. That one is also trading quite a bit below average. So the arm rigs are already confirming a trend here. Tech 1 rigs very expensive. Very good news for salvagers. And Tech 2 rigs pretty inexpensive in the sense that they're below average, but of course they're quite a markup from a Tech 1 rig. Let's take a quick look at the shield rigs then. I think this could be very interesting as well, especially on the large ones, because large let's see, defense field extender is what you want for your passive shield tanks, like the Rattlesnake, if I'm not mistaken. That is more HP. Yeah. And the Praxis, so those are pretty popular. Starts the year at just above 5 million ISK, is now selling for 17.5 million, and look at the lack of supply. Demand here is just overwhelming actually, although they're trying to buy for less than 10 million ISK here. This is an incredible opportunity, of course. Very, very expensive at a 1-year high point. We can take a look at this one. Yeah, some of the less popular ones I think will show different and really weird charts. Look at the volumes as well, but maybe stuff like this, that's pretty average to my surprise. Explosive and thermal 4, that's actually pretty average. So it's really only the most popular rigs so far that clearly show that situation. Oh, I should also take a look at the Tech 2 extender. Yeah, obviously well below average, going for now less than 100 million. Yeah, 99.6 million for a Tech 2. I mean, it's still pretty damn expensive, but overall, if you look at this chart, it's not that expensive. That's very interesting. Do we have anything else that I know is generally pretty popular? Engineering rigs, of course, we've got the like large capacitor battery. Let's see if I can find that. Or capacitor control circuit, excuse me, just for more cap. Same thing, starts at less than 4 million ISK and is now selling for 7.5 million, almost double the price, clearly at a 1-year high point. And then if we try to find the Tech 2 variant, here is the Tech 2 capacitor control circuits. That one is actually doing quite okay, trying to stay around 40 to 45 million ISK, 42 for the sellers here. An exception to the rule does tend to happen. We could take a look at some rigs for missile launchers, perhaps. Right, Rattlesnake again, Praxis, I think for the conduits does make a lot of sense. So, which was loading bay accelerator. Well, starts at 5 million, is currently just below 10 million again as well. Not that much supply. And then is it the catalyst one? Look at that, starts above 5 million, ends up above 10 million by quite a bit, 11.5 million. And then the Tech 2 variants, let's take a quick look at some of these. That one's actually shooting up right at the tail end. That one's actually expensive right now, interesting. And this one right around average. Was expensive here, goes back down a little bit. Alright, so it's not uniformly below average for the Tech 2 rigs, but the Tech 1 rigs are obviously pretty damn expensive at the moment. Could take a quick look at some astronautic rigs as well. Let's see here. Average, below average. And then that one is up, but very bad chart. Yeah, these are just not as popular, so it's really difficult to get any sensible data out of those. But I think we saw like the more popular ones, right? Armor rigs, shield rigs, some weapon rigs, and it's pretty obvious that the trend there is up by quite a bit, especially in the large rigs. I think the conduits have something to do with it as well. Perhaps lots of the salvaging activity that has now that moved to the Triclavian salvage, because that was super valuable at the time. It's crashed the prices back down, but might also have meant less supply in the raw salvage materials, and as a result it's a pretty good time to be a salvager and to be a rig producer. I have lots of rig BPOs. I might get back into that a little bit myself, because I in the last couple of months I have been salvaging a little bit more during my exploration rounds as well. So definitely something to look into. If I'm not mistaken, it's actually been a while, but this was also a request from a viewer, so thank you very much for that. The rigs, yeah, Tech 1 rigs actually really expensive. I think you're gonna get some pretty decent margins out of your salvage and out of your rig production at this point. Something to look into for sure. And that's gonna be it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.